let's talk the latest CPI numbers. Now, the CPI was expected to come in hot, pricing in higher energy prices, but the actual CPI today came in even hotter and is now at 3.3% year over year, up from 2.8% in June. So, what's going on? Well, watch this video and we'll find out more. Interest rate hikes started in March of 2022 and went a lot more aggressive in July of 2022. Now, since then, we have been seeing a turnaround in headline CPI starting June of 2022 from lower energy costs. And even without energy, CPI finally started to plateau towards the fall of 2022 and then visibly come down starting this year in 2023. Just not enough yet. Right now, headline CPI ticked up and went above 3%. And if you take out energy, CPI is even higher at 4.2%. Now, if you dig into the details, there are three components that's really driving the swings in CPI. We talked about one of them already, energy. Energy contributes to 7% of the basket and typically sees pretty drastic swings. In 2022, year-over-year inflation hit 39%, and now we are down the other way in negative territory. But right now, even though it is negative, what we do see is that energy prices have been coming up lately, and this is what's causing the recent uptick in CPI. Either way, the BOC does know that there's significant volatility in energy inflation. And so this is something that they're probably not as concerned about as opposed to the next one, food. Now, food makes up 17% of the CPI basket. And so even though swings aren't as big as energy, small moves still have a sizable impact to the CPI print. And what we continue to see is that even though food CPI has come down from 2022 levels, the pace of decline isn't as fast as what the BOC wants it to be. In June, food CPI slowed to 0.1%, which is great. But for July, food CPI is back up at 0.4% month over month. And if you annualize that, that's a 4.5% CPI print, which is probably too high. Although we do have to say that we are definitely getting closer to target here as well. Now, the biggest contributor to the high CPI print is clearly shelter, which is directly caused by higher interest rates. Shelter makes up 28% of the CPI basket, and mortgage interest is showing a 31% annual inflation growth for July. On a month-over-month basis, there was a 2% uptick in July. So yes, this is a huge reason why our headline CPI is so high. Now, if we look at bond yields, I would have to say it is harder to see what the market is thinking. Bond yields did come up after the CPI print, and it's probably partly due to this and partly due to the contagion risk from the news of an intensifying Chinese real estate debt crisis. So now 5-year bond yields are hitting a 16-year high again, which means variable rates will continue to be high and possibly higher if the Bank of Canada decides to raise interest rates again on September 6th and continue to push up fixed borrowing costs too. At this point, unfortunately, most Canadians who are either renters or have exposure to debt will definitely continue to feel it. But hopefully this is shorter term pain and longer term gain for most. And I would have to say that the ones that are benefiting the most today are definitely the older homeowners who have no mortgages or those who are looking to invest in real estate today, since you are more likely to get good discounts on real estate, and you'll also benefit from collecting higher market rents, which will cancel out the effects of higher interest rates. Now, if you are contemplating making moves on real estate, either buying or selling, we can help. We're a real estate sales brokerage in Toronto that focuses on real estate investing and making numbers-based decisions. So when you want a review of your current real estate situation with our team, or you're looking to sell or buy, just head over here to book a Zoom discovery tour with us. If you enjoyed this video, show us your support by giving this video a thumbs up and hitting that subscribe button to keep up to date with our content. Our channel is all about real estate investing in Toronto, covering everything from market trends, housing policies, to interest rates, to best investing strategies. We're here to make your real estate investing journey easier for you, and so our team offers services like planning, analysis, buying and selling, renovating, finding tenants, and even property management. If you do want to learn more, check us out on our website or find us on social media. Thanks so much for watching, and we'll see you in the next video. Bye.